So you're probably wondering what was it that pushed the market down so much. If you had been following, I had talked about this very extensively prior to the collapse, along with the rally where the market was going to go. And so it followed a very predictable pattern. Even though Fed Chairman Powell talked about a lot of different things, none of it was anything that was unknown to the market. They talked about, increasing coronavirus cases. Again, you can look on any sort of a website to follow what's going on with the coronavirus. I've talked about this all the time, that we're having roughly the same amount, roughly about 20, 22, 23,000 cases a day. So this was not something that the market was unaware of. The rise in unemployment, again, something the market wasn't, is something that investors were not unaware of. Like nothing that the federal government, or I should say, nothing that Powell talked about was anything that the market and investors were unaware of. So why did the market sell off? Well, it's real easy. There's no reason for the market to go up, right? There's no mathematical. The companies aren't doing better. This is information that the market is all aware of. Most trading is institutional buying, right? It's all computerized. Yes, there still are like specialists and people who work for these different sort of companies that will take orders, etc. But the vast majority of the orders that go through on the stock exchanges are done by computer. You still have, Robinhood users, and you have a lot of retail traders, etc., etc. But they don't make up the bulk. They don't push the market in any sort of a direction. Sure, will they maybe move a stock that's kind of illiquid? Sure. Will it move the entire market? Of course not. There isn't enough liquidity from retail traders to be able to do that. But looking back at the chart, you can see all the different price points where the market pulled back, right? You should be able to see that here all the way as far back as February, or you can probably even go a little bit further, but you can see the price points where the market stalled and bounced, where the market stalled and bounced. Same thing here, where the market kind of held certain levels. You can see that here, as the market bounced, it reached certain highs. The market literally played the exact same points. You can see that right there, right? Why did the market sell off today? Because it topped. It hit the 2017, 18s, and 19s high, and there was no reason for it to be valued this high. They literally just pumped and dumped the market, pulled all of the liquidity out of the market, right? There were no buyers. There were literally no buyers in today's market, and you can see that on the chart, right? Looking at today, you can see very, very little buying, right? You can see very little buying in the market. So why did the market stall right here, right? Why did it look like the market was going to bounce, right? You just look back at the daily. You just look back at the daily chart, right? So the market bounced right around here, which is roughly around where it would bounce, because that's where it's bounced. I don't know how many times, right? It bounced here, right? So for the most part, the market has bounced around 24.4, 24.5. So why did the market stall right there? Because that's where it's stalled the longest. Simple technical analysis, support and resistances. And that's why when you look at it on the smaller chart, you see, well, why is it the market stalled and during the midday? Right? Midday stall, where was that? Right there. Right? Market stalled roughly around the 24.4, 24.5. Why? Because that's where it had stalled multiple times. And so some buyers came in probably thinking that the market was going to bounce because this was a resistance level, and they took it down a little further. So in talking about where is it that the market can go? Well, the market can easily come right back down to the 24.5, right? We bounced previously at the 25, right? You can see that right here, right? The market previously bounced around, I'd say around 25, 2, 3 or so around there. You can see that here, right? Where the market bounced 25.1, a little bit higher, because you always have to give a little bit of wiggle room. And so when you saw the market coming to that 27K mark, you should have been saying to yourself, well, what's really going to cause this market to go up? Is it liquidity going to be in there? You can see that there was no illiquidity, right? There was a little bit of selling that went on here the day before, right? And here the day before. So there was sell volume that was already coming in. So you should have already seen that sellers were starting to realize this market is getting peaked, right? There's really no reason. We're overstretched. What's really going to push us this far? We don't have the economic numbers. We don't have the job numbers. We have a decreasing GDP. We have an increasing virus. So what was going to push the market all the way back up here, right? They literally just pulled the rug out from everybody who was thinking, the market's going to go up forever. And they literally just pulled the rug out from underneath you. And so realistically speaking, the market can come down to about that 24.5 area because it's literally ping pong there multiple times. You can see that it fell short here, fell short here, fell short here. And then even when it tried to right here, right, you can see that right there. And previously the market stalled at previous levels before that, right? Market stalled previously just around there, 24.8. And that's where more than likely where you'll see the market head to. If not tomorrow, we might see a little bit of a bounce. You might see a little bounce in the market. It might come up to maybe that 25.6 and then sell, and then maybe sell off. But I think at some point during the next week, we might see a retest of 24.5 and then perhaps a bounce if there's like some sort of an excuse for good news, because realistically speaking, there's not much of an excuse for the market to have been driven this far up as it was. Everybody knows, everybody says, you know, X, Y, and Z is already priced in. But realistically speaking, the market does not follow what's going on in the actual economy, right? Like what's going on in Main Street doesn't affect Wall Street. And so you might be able to point to things on Main Street and say, well, this is what the market, but none of that stuff, all that information was already here, right? Prior to the market rally, coronavirus was already there. In terms of the number of deaths, we had already hit 100,000 deaths a long time ago. We have not had most days where it was less than 20k new coronavirus cases per day, and that's been going on for months, right? So there wasn't any sort of information that, at the very least, the people who move the market, that have the real money, the real liquidity, didn't already have that information. It was literally a pump the market up and sweep the market legs right out from underneath you.